Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for the first full week of January 2020, the year of vision, the year of clarity. We want to start off this week's video with kind of a look back on where we've come from within 2019, and we've just put together a little bit of a table of some of your major indices that we actively engage throughout the year, specifically within the S&P, the Nasdaq, the Russell, the Dow, and then also we want to kind of complement that with a gold. We have been in gold for the last several months, pretty much majority of 2019. Have seen some pretty good returns. We want to highlight that as well moving forward within 2020 as a potential hedge within the overall broader market. So we can see very consistently, we'll start off with the SPY, the Sp500 Etf. We've seen a very significant gain year over year with the S&P up almost 31%. And if we take a look back, we'll dive into the charts momentarily, but you can see that within the S&P 500, we've only saw 2 down months across the board all of 2019. So the bulls were in full command across the board, as we also see within the Nasdaq, nearly 40% gain across the board for all the tech-heavy names, primarily led by some of the more familiar names, Amazon, Apple, Google, etc. Then kind of coming in as a slight lagger on the overall indices, we see the Russell coming in at 25%, but still very, very significant amount of gain there across the board. And majority of that has been seen over the last 6 months or so within the Russell. And then coming in as kind of the lagger across the board for the majors is the Dow, with being up just short of 25%. At the same time, we've been very actively engaged and continue to be very long within gold. And you can see gold coming up with 17% across the board. And we've seen some solid gains across the board for most of the year. And we don't anticipate that to change dramatically within 2020. But as we have seen in December, a very solid Santa Claus rally coming into the end of the year. And then just in the first few days of 2020, we have seen some very significant volatility from geopolitical activities, as well as the potential impeachment of President Trump. And then certainly there is a heightened awareness toward the latter part of last week and going into this past weekend with the possibility of the U.S. getting into military conflict with Iran. So we'll just jump right in and take a look at our broader indices, and we can kind of see, we'll start off with a longer term chart on the monthly, and we can see where we have come from to where we are potentially going into this first part of the year. So we can see very, very bullish between all of 2019. We can see here on the monthly chart, and as I stated before, we only saw 2 down months within the S&P, and we do see that that has been an opportunity for the bulls to kind of take a little bit of a rest, take some profit, allow the sellers to step in. But you can clearly see throughout all of 2019 and the majority of the last 10 years has been very, very bullish. And we don't anticipate that to change that much dramatically going into the latter part of the 2020 timeframe as well. So we do see that no new sellers are coming in, but at the same time, as we jump into 2020, we do see an opportunity for us to potentially take advantage of just a little bit of a slowdown in momentum. Again, this is on the monthly chart, and we'll dive right into our normally weekly view. You can see it just that much easier, where we have seen pretty consistent gains, and over the last 12 weeks or so, we only saw 1 down week for the S&P. And that's something that's very, very rare. And we also have seen pretty much an engagement of doubling our range from a pretty consistent balance that we saw toward the latter part of the summer. We did anticipate that we would see some type of pullback if we were able to kind of double this larger range that we do see here below. And we did see that come to fruition, albeit just a little bit of a lag in regards to when we anticipated that, but that's okay. We don't aim to be perfect. The goal is to be able to adjust to what the market is providing us and looking for opportunities to make gains as well as minimize our losses. So we can see very strongly throughout all of 2019, we have been above value, and we continue to see that, but there are some opportunities that we do see in this first and last week of the year, is that the bulls may be looking for some opportunities to take some profits as they look to kind of de-lever or de-risk. And we do want to watch that moving forward. Obviously, the geopolitical activities that are taking place will cause some additional volatility, at least in the first few weeks of the year. Now, conversely, on the Nasdaq, we have seen Nasdaq has been on a solid tear, like we stated earlier, just greater than 40% year over year. We do want to kind of pull back and take a look at those significant gains that we have seen in 2019. Very similar to the S&P, we only saw 2 down months there as well, and roughly the markets were very, very correlated across those 2 months. And we have seen some very, very solid gains in some of those major names that we all are very familiar with and very much like to follow: the Facebooks, the Amazons, Netflix, Google, and I'd even throw in Apple within there as well, which had a very strong rally toward the latter part of the calendar year. So we do anticipate a potential opportunity for us to look at stepping in for some shorter term shorts, but we do anticipate that still within 2020, our longer term projection is that we do see some pullback, but then I think we will kind of close out the year very similarly on top of a high, unless there's some major geopolitical news, which is, roughly 60-40. We will have some type of conflict going into Iran. Hopefully we don't. And thoughts go out to all of our listeners that may be veterans or active service people across the globe. Thank you for your service. At the same time, we do want to kind of prepare for some type of pullback, potentially back down to the 9 moving average. Obviously, we have ridden this very aggressively throughout the majority of the year, and we do want to look for, is there an opportunity for some type of retracement back down to a trend line for an opportunity for the bulls to step right back in. So if we do see that, we anticipate that would be roughly around the $200 mark, which is currently the 20 period moving average. So we do want to watch that moving forward. But again, there is some very, very strong opportunities for the bulls to stay in control. Doubt it will be new sellers coming into the market to short. It could be just longs looking to liquidate their positions, but not necessarily new sellers trying to anticipate a new move. It's just those that would be exiting a position. Now, conversely, we have seen in the Russell very aggressive over the last 2-3 months. We've seen some very solid gains in the Russell, and we continue to follow that as an opportunity for us to take a look at being able to step in on a pullback. And we have seen that here in the latter part of November and going into December. We have seen a little bit of pullback on specifically in the last 2 weeks, and we have identified as this is an opportunity roughly about the $164 level as a rebuy if we did anticipate some type of bull stepping back in. At the same time, if the Russell is an indication of a leader for the broader indices, the Nasdaq and the S&P, this could be a signal that the bulls are looking to liquidate, as well as some potential new sellers stepping in. Last week was very, very aggressive, albeit a short week. We did see some pretty significant pullbacks across the board, and the Russell saw a larger percentage reduction in comparison to the other 2 major indices. So we do want to watch this and look for an opportunity. We do anticipate a pullback, like we stated, roughly to the 174 level. If that is breached, we do see a potential bounce towards some support, roughly about the $161 level. And we'll continue to watch that moving forward. And we'll step over to the Dow. We have seen pretty consistent across the board, very similarly to your other major indices. We don't necessarily follow the Dow or trade the Dow, but we do want to report it out for those that do. We have seen very similar to the S&P and the Nasdaq with 2 months down. The Dow was with 3 months down, so not that much of a dramatic change, but it also just reiterates that all your major indices across the board throughout 2019 were extremely bullish. Now, coming into 2019, we do anticipate some type of pullback on the Dow. We do have an opportunity target to pull us back down to the $280 amount. So that's roughly about $6.50 from where we are today. But all of this could go out the window depending on what takes place within our macroeconomic and geopolitical engagements that we have seen just come to fruition over the last few days or so. But we have seen a pretty consistent trend line upward throughout all of 2019, and we don't anticipate that to change too much, but we do want to watch this as it does come back down potentially into that $280 amount. That could be an opportunity for the bulls to step right back in and push us back up to all-time highs. So we do anticipate some type of short pullback and then a reversal right back upward. Now again, given on how far we have come and how fast we have moved in 2019, there is an opportunity for us to see a very significant pullback. Now that would come if we do step into some very aggressive conflict, which I hope that we don't, but we do want to kind of keep ourselves aware of any potentials. Now, if that does take place, we do anticipate some type of continued return into gold. We have been long gold majority of 2019 and have seen some very solid returns, and we anticipate that to continue at least up into the $150 amount. We're kind of at roughly about 145, 146 at the moment. So we do have seen this type of movement, a slight pullback and then a very aggressive push. So as you know, the market moves from excess to balance and then from balance into excess. And we have seen two very visual references on the monthly chart on where we have seen that balance, and we have seen some pretty significant breakouts. So we have seen balance here, and we do anticipate an additional breakout upward, and we do have a intermediate target of 150 as an opportunity for a resell, and then roughly about that $152, $153 amount is our secondary target, and it maps directly into one of our Fibonacci levels. So we do want to watch this moving forward, but do want to highlight that as a potential hedge to the broader market, if there is a large significant pullback, gold will be one of those safety vehicles, as it always is. So we do want to kind of follow up and give a little bit of more detail on gold just from a weekly chart perspective, so we can kind of see that move and how we have seen some pretty aggressive moves over the last few weeks. And we did kind of see this as some type of cup and handle type format. And it is an opportunity for us to take a look at this as kind of this rounded bottom here, an aggressive pull up, potentially a pull back, and then a push forward just that much higher. So we will watch that moving forward and take a look at it going into the next few weeks as we step into earnings season for some of our larger names on the indices. We could look at an opportunity for gold to continue to just be that much more of an opportunity for us. We'll conclude with a couple of equities that we are watching coming into this first and second week of the month and the new year. We will continue to watch gold, but at the same time, I'm watching Verizon as a potential bullish opportunity. We have seen a pretty good pullback over the last 2 weeks or so, but it is coming into our value area high. It is coming into the bottom of a channel, and this is also our 20 period and 9 period moving average kind of converging here. So we do look as a opportunity, as a potential buy if we do see some type of positive news coming out of the broader market. We will step in as a potential long. If that does not take place, we will continue to watch and look for an opportunity back down at roughly the $58 amount as a potential buy. And it does map right into a low volume node, which you see here in the gray, as well as our 50-week moving average. But a strong probability that we do see a bullish move coming off of this, which does map not only on our weekly charts, but it also maps into a daily. If we zoom in just that much more, we can see that we did come into value with a look below and fail, as we always look to call out as potential bullish signals. So we do want to see if we can kind of step forward and potentially move and close out the gap that we have seen over the last trading day or so. So with that, we'll leave you. Very excited to step into 2020, have some very exciting news to bring to you over the next few weeks or so. So we're enthused. We're doing a lot more speaking engagements, as well as if you haven't picked up our book, please take a look at the link at the bottom and pull it from Amazon. So as always, we thank you, and it's your money and it should be under your control. Take care.